Let's discuss what potential impact a Brexit could have on Asian economies with Anthony Chan, Chief Economist at Chase. Anthony, always good to see you. So, Anthony, markets rallying across the globe today after the latest polls show that the UK is leaning towards staying in. Do you think they'll stay in?
Well, I think the momentum has clearly shifted, Michelle, in the direction of staying in. If they can just maintain that momentum, it's going to be a nail biter, but I think they can push it through.
So what are your expectations? Come Friday morning, they vote to stay in. What is the global market going to look like?
Well, clearly, if you've seen the global markets panicking as it looked like they were going to leave, so if they were to stay, then of course you're going to get a reflex positive reaction all over the world. Realizing that Asia doesn't have a strong exposure to the UK, but still it's an important exposure. In terms of real GDP, they have an exposure about 0.7% to the UK, and of course China having even less than that, 0.5%, but it's still significant.
And President Xi voicing his support for the UK to stay in the EU. What would it mean for trade between China and the UK if there is a Brexit?
Well, I think if you've looked at what's happened between the relationship of President Xi and the United Kingdom, is that they really have been forging some really tight relationships, certainly over the last couple of years. And I think they would want to see the UK stay in the European Union because that gives them an opportunity to expand trade with the rest of the European Union and having the UK as a pro-supporter of expanding that trade would be very positive for China. And I think that's one of the reasons why they're so excited about it.
Well, many seeing London, the UK, as a gateway to the rest of Europe. But if the UK leaves the EU, doesn't that strengthen China's position in terms of negotiating strength both with the EU and with the UK?
I really don't think so, because right now the strategy has been to have strong ties with the United Kingdom, and that in turn would be sort of providing opportunities with the rest of the European Union. Of course, they'll have to shift their strategy very quickly, but that will take time, the same way that it will take time for the European Union to renegotiate all those trade relationships with the rest of the other 27 European Union countries.
But there is a warmer relationship between China and the UK than China and perhaps some of the other members of the EU. David Cameron pushing for a free trade agreement between China and the EU, but because of those rules and regulations that the UK wants out of, that's been held up. Is there no positive for a China and UK relationship minus the EU?
Well, I think if it wasn't because of the rest of the EU, it wouldn't be as exciting. But remember that having the UK as remaining as the financial capital of Europe and having, say, the renminbi being able to trade freely in the United Kingdom is a real big positive for China.
Well, Japan's Prime Minister Shinzo Abe also echoing the sentiment that he wants the UK to stay in the EU. Japanese companies employing about 140,000 rather people within the UK. What impact would a Brexit have on Japan?
Well, it's very clear. In fact, when you saw that Brexit was increasing in probability, one of the things that happened was that the Japanese yen was viewed as a safety haven, and that currency got very strong. And that's exactly what the Japanese government doesn't need, or the economy, a strong yen right now. So they certainly don't want Brexit, because that will mean a strong yen, and that will be disastrous for the equity market and for the economy, because they'll be less competitive.
India's Modi also saying he wants the UK to stay in the EU. What would it mean for the UK as a foreign direct investment destination in terms of Asian countries if it were to leave?
Well, you got a couple of factors here. If all of a sudden the British were to leave, that would weaken the pound. It will certainly weaken the euro. So it would make a lot of acquisitions a lot more attractive. But offsetting that would be all the uncertainty in Europe and in the UK, and that makes some of these exciting investments a little bit more fuzzy. And I would say on a net-net basis, it is not positive.
So is there any Asian country that stands to benefit from the UK leaving?
Well, those that have smaller exposure to the UK, Hong Kong certainly would not, because 2.3% of GDP GDP in Hong Kong is exported to the United Kingdom. So a 25% reduction, for example, of their exports would subtract about 0.6% off the real GDP of Hong Kong. And this year, we don't expect Hong Kong to grow more than 1.1%. So we're talking about almost half the GDP. So countries that would get hurt less, China, of course, with a smaller exposure, would be one that wouldn't be hurt as much as Hong Kong.
Anthony, the U.S. Central Bank, the Fed, has said it's keeping its eye on the Brexit vote as one of the factors it's taking into account before making any decision to raise interest rates. How much of this is being factored into the decisions of the People's Bank of China, the Bank of Japan? And can we expect to see any difference in policy if they do just decide to stay?
Well, already we've heard that central banks all over the world, the Bank of Japan, the Bank of England, the Federal Reserve, they're all positioning themselves to add a lot more liquidity. So far, what we've talked about are the economic or trade links, but there's another channel we didn't talk about, and that is financial contagion. To the extent that that in itself causes that financial contagion, the whole world will actually suffer from that. And that's precisely why the major central banks of the world are so cautious, and they don't want to experience anything even resembling a Lehman effect if the UK were to exit.
But probably much ado about nothing when the vote comes in on Thursday.
If it comes in the right way, I would agree.
Okay, thank you so much. Anthony Chan, Chief Economist at Chase.